Hi, I'm Will Chapman from Brock Harcourt's Financial Services. You're watching Open House, and each week we'll be bringing a finance wrap. We hope that you enjoy the show.
Welcome back, ladies and gentlemen. You're watching Open House. And by the way, you can email any time you like young Ben Nelson has. I got it wrong. It's Sandy Nelson Teamwear, not Sportswear. So I'm very sorry about that, Ben. Thanks for emailing in before you arrive on the show in a few minutes' time. Will, welcome.
Gentlemen, how are you?
You're looking absolutely splendid after your break.
Thank you. I'm feeling very refreshed.
Good boy. I'm going to get straight into it, guys. Interest rates, obviously, where do we see them? Let's not talk short term. Let's talk a little bit longer term so the punters out there can get an idea of what they should be looking for. What are you depicting for 2010?
Well, I read a pretty good article earlier in the week suggesting that we're still going to see, 3 and 4 rate rises before we get back to what's considered the norm for our market given our economic state. But, I can't see them all coming just at once.
So it's not going to be bang, bang, bang like it was towards the end of last year?
No, I think that as interest rates get higher, it gets harder for them to justify continuing to increase them. So I can't see them going up unless we had an extraordinary amount of spending in the Australian economy.
Well, just listening to the radio on the way in this morning, one of the people that I was listening to said that because our economy is so strong, the interest rates are simply too low.
Yeah.
Does that make sense?
Well, I mean, at the end of the day, if interest rates are low, it's going to stimulate the economy. Yep. And if the economy is growing at a level that's faster than what the Reserve Bank wants, then they're going to put them up to try and slow some of that stimulus.
And can I just ask one more? And I know it's sort of out there in the future stuff, but 0.25 has been what they've been going up at present.
Yeah.
Can you see a bigger jump than that at any time?
Well, that's going to be dependent on those economic figures, but certainly from the banking perspective, we had seen late last year some of the banks putting them up more than what the 0.25 rate was, and that's also going to get harder for the banks to justify doing that.
Yeah, they got a little bit of flack for that, didn't they?
They copped a bit of flack for it, but
and rightly so.
Yeah, absolutely. Yeah. If they go for the money grab, then they deserve to cop a bit of a beating on it.
I agree. Maybe one for you, Gregory.
Yes.
Capital growth.
Yes.
Our young Hannah Silverman from the Advertiser rang yesterday.
Lovely lady.
Lovely lady to inform me that our capital growth in South Australia wasn't as strong as the Eastern Seaboard or Canberra and Darwin, she mentioned.
Okay, well, look, my answer to that is you can look at 1 year in isolation, and over the last 12 months it's been 6%. Sure, other states have been upwards of 10, 12%, but if you look at those same states, the previous 12 months, they've actually been going backwards as well.
Yeah.
So we've had steady growth all the way through. So do you want slow and steady wins the races? I think I'd coined the phrase from
right,
there.
yeah.
Or do you want it all over the shop? And look, I'll bank at 6% any day of the week.
So all you're saying is that in this particular quarter or the last quarter, we've just copped, the other states had a fairly strong rise.
Yes.
We've just been our steady rise.
Yes.
And on that sort of loop, it just happened to be one of those quarters where there was a fair gap.
That's exactly right.
Okay, I'll wear that.
So, look, 6%'s very good, and
Loving
SA's
it.
always been very good in that regard.
So if you're looking for an investment, we're still just a very, very safe,
Absolutely.
no risk type investment.
And considering we've just come out of the greatest global financial crisis, and when I say come out, well, I guess
Coming out.
coming
Yeah,
out, coming
yeah,
out
yeah,
is
yeah.
probably the better word. That's incredible.
Sure.
That's phenomenal.
Yeah. All right, Will, I'm going to actually read this question because it's quite in depth. You ready for it, mate?
Let's go.
You wanted to know the reasons why a residential sales contract should be used, how to fill it out, completing the finance building inspection clauses.
Well, I thought that I would somewhat throw it over to Greg this time around, and finance is a big part of what we obviously do as a finance broker, and the finance clause is something that in South Australia comes up time and time again, especially with first-time buyers. They want to know exactly how it's going to impact them, how to fill it out, and that type of thing. And we see contracts that are from RESA, from other industry associations. We see some private ones as well, and some of them are a little bit dubious, to say the least. Definitely use a RESA contract or similar. But one of the things that actually does come up is how should I best fill this in? What should I look for? What are some of the challenges, the pros and the cons? And how do we protect our interests and that type of thing? And I thought I'll throw that over to Greg because you're probably best placed.
All right. Hopefully I won't go in too much of a diatribe and legalistic. First thing, use a RESA contract. It's a balanced contract. When you're filling out a special condition clause, this is a major purchase, so think about what you're doing. The special condition clause that we have for subject to finance, which is a great majority of the way properties are bought and sold in South Australia, is we have unconditional or conditional. Long and short of it is it's there to protect the vendor, and lo and behold, and some of my members will squeal at this, but it's there to protect the purchaser as well.
Yeah.
What this special condition actually achieves is we had a couple of occasions whereby a bank had given an indicative indication approval subject to some conditions. So that's called a conditional approval. The vendor, in the end, didn't like it and wanted to move on. And they can actually, because of the lack of certainty, when you've got a third party like a bank involved, it gets very, very difficult. So what we've tried to do is get some certainty. The vendor knows what's going on, the purchaser knows what's going on, and the key in all of this is fill the information out and do it conservatively. You know, you fill out the loan amount, the interest rate you're after, the time frame with which it'll get approved. If you think about those issues very carefully, nobody should have any problems at all.
I think the key, just in summarising, the key is that our real estate agents are really well trained.
Yes.
Particularly the ones that have been through the REI.
Yes.
And I'm going to give Brock Harcourt's similar training because we're sort of in line with what you're doing. I think it's really important that you're using a real estate institute salesperson.
Cannot agree with you more.
And then to double that up again, if you're using the correct documentation and it's been correctly filled out, both vendor and purchaser are looked after.
That's right.
So have we answered your question?
Well, you have. One last thing I might just add on, though, because a lot of people do ask us, just very quickly, standard variable rate. I think personally, I think that is the most suitable for both sides. Would you agree with that?
Oh, definitely.
As far as a rate to nominate?
There are lots of other permutations, but I think that's the fairest.
Yeah.
Everybody knows what it is. It gets published, and so it's the safest way to move forward.
Yeah, no, very good. It's an
Thank you
important
very
part of
much,
us.
gentlemen. Hey, thanks very much for bringing that to the table, Will.
That's
It's
all
an
right.
extremely important part of our transaction.
Absolutely.
And I know that the Real Estate Institute spent a lot of time making sure that documentation's right. Sponsors, many of them. API Insurance, and you're going to be hearing from Andrew Cook shortly. Smart Post, Steve Banwell, thank you very, very much. Who else we've got? Duncan Bashir Hennon, very new to us, and I think the big fella's rocking up next week to have a chat. Always love having him on board. And the Unforgettable Houseboats, thank you very much. We're actually going to go up to the beautiful River Murray for our estate planning next week, so very much looking forward to joining your good folks. Thank you very much for watching. We'll be back very shortly with Sky Taylor from all the information from down by the sea, so we're looking forward to that. Back shortly.
Thanks for watching Open House. We hope that you've enjoyed the show. I'm Will Chapman from Brock Harcourt's Financial Services. You can call me anytime on 0411 454 656 or send me an email at will.chapman@brockharcourts.com.au for any finance or investment advice that you may need.